Hello, everyone. Welcome to today's webinar on free zone taxability. So, I think this is one of the much awaited or anticipated decisions released by the authority via Cabinet Ministerial Decision 139 and Cabinet Decision 55. So, here I am with Pratim, and today we're going to discuss some of the important aspects of the decision, which would include determination of qualifying income, what are qualifying activities, what would fall under excluded activities, what would be the treatment of immovable property, derivation of non-free zone income, and the most important, the de minimis rules, the calculations and the rules, which are very, very stringent. So I give the mic to Pratim, and he'll be giving a very quick background about the decision, and then we'll have a Q&A session.
Thank you, Kanika. I think before we get into the nitty-gritties of the decision, right? I think it's and getting into that very interesting and wonderful Q&A session that you've just mentioned.
Yeah.
Like you mentioned, giving a background is important, and looking at firstly, how does one become a qualifying free zone person? Why is it important? It's important because unless you're a qualifying free zone person, whether then only you can earn a qualifying income. Then only all the 0% and all these things come into play. So let me just present my screen. I have, I think, around 3, 4 slides, and I'll just take everyone through the decisions, and then we can take
Yeah.
it from there. Yeah. So here, when I mentioned the conditions to be a qualifying free zone person, now the first condition, the couple of conditions that were already specified in the corporate tax law, and there are some additional conditions that have been mentioned in the decisions. So let's deal with the conditions one by one. First one is maintaining adequate substance in the state. For this first condition, actually, the decision has clarified what this substance means.
Yeah.
Because you know everyone was wondering whether they would follow the similar pattern to ESR
Yes.
regulations or not, but they have basically
Yes.
said that the core income generating activities need to be performed in a free zone, and depending on what your activities and how wide they are, you need to maintain adequate assets, adequate employees, adequate operating expenses. And they've also gone on to clarify one thing very you know significant, is that you can outsource these activities as well, as long as it's to a related party or to a third person, but it needs
In
to
a
be in a
free
free zone.
zone. That's fenced.
Yeah,
Yeah.
and you need to maintain adequate supervision over these outsource
Yes.
activities. And the second condition is deriving qualifying income. That is something that we will touch upon, in the entire presentation that we have. We are only talking about qualifying income, so we'll get there. And
Yeah.
the third one is has not elected to, to be subject to regular CD. Excuse me. Now, why is this important? Why would any qualifying free zone person want to be subject to tax regularly? Because of, tax grouping, transfer of losses. These are not available to qualifying free zone person. So any group that has multiple entities, they need to really evaluate whether to opt in for qualifying free zone person benefits or to get into tax grouping or transfer losses, depending on where they are.
Hmm.
Fourth is complying with transfer pricing regulations. We all know this. This is well accepted. Now, what are these additional conditions? The first one being that the qualifying free zone person needs to satisfy de minimis conditions. Now, you had mentioned de minimis in your
Yeah.
introduction. Now, what does this mean? So, everyone knows that a qualifying free zone person can have qualifying income, which is 0%,
Yeah.
and non qualifying income, which is taxed at 9%, right? Now, they have come up with a condition that they're saying this non qualifying income part
Hmm.
can only be 5% of the qualifying free zone entity's total revenue, or it could be dirham 5 million. So whichever is lower. So they've come up with some additional stringent conditions
Yeah.
there. So you have to satisfy that additionally as well, in addition to those first four conditions. And sixth one is, to prepare and maintain audited financial statements. That comes out of other decisions as well.
Hmm.
So now let's move to the most important part is what is a qualifying income? Now say, yeah. Now
A
I
lot of
know
people will have questions on this.
for
What
sure.
would be considered as a qualifying income, and what would be what would be excluded from a qualifying
Yeah,
income?
and before I begin, I think it's very important to touch upon the fact that in the public consultation document, right, they harped on transaction with mainland, it would be subject to tax, export activities would get benefits. But this decision is more to do with what kind of activities you're carrying out. They're not really talking about import, export, other than in certain situations,
Hmm.
but it's more to do with what kind of activities you're carrying out. So let's look at it, broadly. So we've, prepared a chart or a table,
Hmm.
which is, which we've broken down, in a simple manner to make it simple for everyone. So when I look at the income streams for a qualifying free zone person, broadly the decision, talks about four. Like one, income which is derived from a free zone person. That is when a free zone person transacts with another free zone person.
Hmm.
Number two, when a free qualifying free zone person transacts with a non-free zone person, that could be, anything to do with that could be a natural person in the mainland or a company in the mainland, or it could be a foreign company as well. So non-free
Okay.
zone person is anything that is not a free zone
Yeah.
person. So next would be a domestic and foreign PE. P concept is a very international concept, Kanika, and you know they've extended this very, a very, you know intelligently in a way that they've replaced certain words in the P law. And they said that if a qualifying free zone person has some sort of a physical presence and any other kind of presence, a place of business basically in the mainland, that would be considered to be a domestic PE. And that is taxed a bit differently. I'll get to that. And then coming to immovable property, again, lots of condition and riders attached to immovable property.
Hmm.
So four streams, huh? Income from free zone person, income from non-free zone person, domestic P, or foreign P, and immovable property. Now coming to free zone person. So when I transact with a free zone to free zone, then one thing I need to make sure is that the other free zone person is the beneficial recipient of those goods or services.
Hmm.
They've clarified what does beneficial recipient mean. They have said that it means that they are the ones who are receiving the goods or services are the ones who are enjoying those goods or services. They don't have a contractual legal obligation to pass it on. So it's kind of like an anti-abuse provision.
Hmm.
So it can't just be a merely a pass-through entity. So once you satisfy that, then you move to whether those activities that you're carrying out as a qualifying free zone person is an excluded activity or not. I'll get to excluded activity when I'm talking about transaction with non-free zone person. So if it's not an excluded activity, then only that income becomes 0%. But if it is, okay, there may be consequences. I'll get to it, everyone. I'll get to it. Yeah. Now, non-free zone person, right? So, unlike free zone persons, where they're talking about all income, you just need to ensure that the other person's a beneficial
Hmm.
recipient and it's not an excluded activity. But for non-free zone person, you can only get the 0% benefit when you carry out something called a qualifying activity. So here you can't be doing anything. You have to do the qualifying activity first to see whether that income would be subject to 0% or not. What are these qualifying activity? Let's just go through it. Now, okay. So they've covered manufacturing of goods or goods or material, processing of goods or material, holding of shares or other securities, ownership, management, and operation of ships. In relation to that, they've also covered financing and leasing of aircraft, including engines and rotable components.
Hmm.
And when I look at financial services, they've covered reinsurance services, they've covered fund management, and they've covered wealth and investment, management services. And when they've covered, what if a multinational has a headquarter in UAE? They've also covered that. They've covered headquarter services to a related party and treasury and finance services to a related party. Okay, and now comes
The most peculiar one.
yeah, the trickiest one where you know, where what if there's a distribution of goods? So if you distribute
Trading, when we're
goods,
talking
yeah,
about
trading.
trading of goods.
So distribution of goods only in and from a designated zone.
Yeah.
Okay. Now, to a customer that resells those goods or materials or processes or alters such goods or materials for further resale. So it has to happen in or from a designated zone to a customer that resells or processes or alters it for resale. And there's an additional criteria to this that they've clarified that this again distribution needs to be undertaken in or from a designated zone, and the goods need to enter the state through a designated zone. So they're kind of implying that it needs to enter UAE physically into the state
Via a designated zone.
via a designated zone. And it's the first time we've heard the terminology designated zone. In corporate tax law, up till
Yeah.
now, it was only free zone, free zone. But now they've brought in this VAT concept of designated zone also, and they've defined it and they've referred to the cabinet decision related to VAT for referring to what are these designated
So,
zones.
Pratim, I think it's only for this particular clause K, wherein they only talk about designated zone.
Yeah.
But if you see otherwise, wholly they are not talking about designated zones. The CT law only talks about free zones.
Mm,
Now it's only for the qualifying activities for this particular activity itself. They're talking about designated zone
exactly.
and referring to VAT.
Exactly. And last clause, any ancillary, services activity that is, you know, related to the above activities that I mentioned. This can get tricky. We'll get to it, everyone. We have a Q&A session also, and
Yeah.
we'll throw light on this as well. Now, coming to, let's get to, okay, once you're done with qualifying activity, yes, you get to whether you perform an excluded activity or not. Now, for excluded activity, what are these excluded activities? There are few activities that are listed. Now, transactions with natural persons, other than some which are already covered in qualifying activity, like fund management, investment services, shipping, and airline, banking, insurance, other
Mm.
than the reinsurance that I mentioned, finance and leasing activities, ownership and exploitation of immovable properties other than those immovable which are located in a free zone and you get income from a free zone
Yes.
person. So very specific exclusion.
Mm.
So any immovable property that is located, say, in a mainland, then you may fall under this excluded activity.
Mm.
Then ownership and exploitation of intellectual property as well. This is very, very interesting where people have set up IP companies within a free zone. And obviously any ancillary activity in relation to
Really.
that. So now you are transacting with a non-free zone person. Yes, it's a qualifying activity. You're carrying out, say, your headquarter activity. It's not an excluded activity, also 0%. But what if it's an excluded activity, right?
Mm.
Then you have to also satisfy de minimis. Like I mentioned, that 5% and 5 million, you have to satisfy that condition as well. Only when you satisfy that condition, say you have some income from royalty, from a trademark, and that if it's below 5% of your total revenue or it's below 5 million, whichever is less, that's when you'll satisfy it. If you don't satisfy,
Then regular CT would be charged.
exactly, and
Yeah, that's the
then
point.
you cease to be a qualifying free zone person, Kanika.
Hmm.
Then you cease to be for 5 years,
5 years.
the current year and 4 years next to it.
So
And
these rules are very stringent.
very, very stringent. If I look at it, it's almost like they're telling you mostly to do the qualifying activities itself.
Hmm.
And it's practically might be difficult for any company to predict what would be the non-qualifying revenue,
Yeah.
right? So it'll be very
So they've
difficult.
fenced everything about the qualifying
Yeah,
activities.
yeah. And when it comes to domestic PE, they have excluded it and taxing it separately, where domestic PE or a foreign PE's income would be taxed at 9% flat.
Flat.
So if a free zone person has a mainland branch, the mainland branch's income would be taxed at 9%.
Mm.
Similarly, for immovable properties, they've created a segregated taxation system, but only for few.
Mm.
So if you have a immovable property that has to be located in a free zone, that is also a commercial property. Okay. Located in a free zone, commercial property. and you're earning income from that commercial free zone property through a free zone person,
Hmm.
that's when you'll get 0%.
So if it is a residential, then it's
9%.
9%,
So
straight away
residential means,
9%.
yeah, 9%. And then if you're transacting, even if it's commercial, but you're transacting with a non-free zone person, then it's 9%.
Hmm.
Okay.
So in this case, Prateek, don't you think the de minimis rules will apply for immovable property? Are we looking at those rules?
So de
Or
minimis.
it's straightforward 9%?
So no, so it's straightforward. So we'll have to look at whether it's excluded activity or not. If you remember that when we had talked about ownership and exploitation of immovable property, so if you're transacting with a non-free zone person and or a free zone person, and you're exploiting an immovable property, other than in a free zone commercial activity, any other kind of immovable falls in the excluded activity.
Hmm.
Then you have to satisfy de minimis condition.
Okay.
Yeah.
Yeah.
So, and
I think that's provided clarity to the audience.
exactly. So now we've set a base for the law. I think it's very critical that we get to some Q&A,
Yeah.
quickly. Yeah. So why don't we start with something simple, Kanika? I think we all spoke about qualifying free zone person, but can a natural person get a qualifying free zone person benefit?
No, as per the definition of the law, it
Yeah.
has to be a juridical person or a foreign branch of a free zone person registered in a free zone. So it either has to be registered, incorporated, established in a free zone person, but it cannot be a natural person.
So you mean to say that if you're not a free zone person in itself, how would you get qualifying free zone
Yeah,
person benefits? Right.
right.
Yeah. And yeah. Now, when I'd mentioned a lot of when I was talking about designated zones and free zones and different kind of there's so many free zones in UAE. Would all free zones be considered qualifying free zones, or is there any sort of clarity in the law?
Yeah, so I think this the law specifically mentions that this will be specified in a cabinet decision issued by the ministry, but we don't have any formal procedure for it. I think everybody is actually wondering that would there be a differentiation as in VAT? There is a differentiation between a designated zone and a free zone.
Yeah.
But right now, it's only as we discussed. It's only in that particular K activity they've mentioned about designated zone as per the VAT regulation. So I don't think there's nothing. We're still waiting for it. Still await it.
Yeah. And I think it's very important. I think let's wait for the list of free zones. I think it's
Yes.
very critical, but it seems to be a bit of a departure from the VAT law.
Yeah.
Yeah. And now, when I spoke about transacting with a non-free zone person, so you have many entities in designated zones or in a normal free zone, right? That export services like technology, marketing, or say a management consulting firm, right?
Hmm.
Its client base is completely outside UAE. Would it be eligible for qualifying free zone benefits?
So these particular the kind of services you're talking about, Pratim, these services are actually not mentioned in the list of qualifying activities. So
Hmm.
at the moment, as I said, we're not using the words as import or export. We're only
Yeah.
talking about activities per se.
Yeah.
So those will not it's not as a part of these qualifying activities. So we'll see whether the de minimis rules will be satisfied or not. If not, then it'll be charged at a regular CT. If yes, then it'll be 0% CT.
Yeah. Yeah. And remember, I think I said that transfer pricing regulations would be applicable to in order to satisfy,
Yes.
yeah, those the primary conditions to be a qualifying free zone person. Now say I am a free zone person, okay, and I have a mainland branch. Let's take a scenario.
Hmm.
I have a mainland branch, right? So it would be my domestic P,
Hmm.
correct? Would I have to do TP between, for transactions between a free zone entity and its mainland branch?
So you already answered the question. So if it's a domestic PE,
Yeah.
if it's a mainland branch,
Yeah.
if a qualifying free zone has its mainland branch, and
Yeah.
if it's a domestic PE of a qualifying free zone,
Yeah.
then of course TP would be applicable, and you'll have to comply with the TP
Yeah,
rules, right?
I think very importantly, even the decisions have clarified that a domestic P of a qualifying free zone person would be considered to be
Hmm.
independent of the main entity
Yes.
just for this, reasons, and would be treated as a related party. So,
Yes.
Kanika, I think,
And a
yeah.
qualifying free zone person with its mainland with its free zone branch qualifying with its free zone branch then it will not impact. No TP would be applicable because it's just the same.
That's a very interesting observation
Yeah.
because the free zone branch would be treated as one of the same as the
Right.
yeah. I think it can get complex. So you can see that depending on which scenario and what
Yes.
facts apply to you, it can get complex. Now coming to the one important point that I had highlighted, that ownership and exploitation of intellectual property,
Hmm,
right?
hmm, hmm,
Property assets.
hmm.
Now you have these entities with computer software. You have these app companies in free zones who give a license to use these apps. So some multinationals give the right to their related party. Would computer software be treated as, would it be excluded? How would it be taxed?
So, when we were talking about excluded activities,
Yeah.
it mentioned about ownership or exploitation of an intellectual property right, right?
Mm,
So, it doesn't say anything about intangible asset. So, I think taking experiences from other countries, IP is always a subset
mm,
of intangible assets. So, we need further evaluation to see whether this can be included as a part of intangible asset or not.
mm. Okay. Very
Yeah.
interesting. Very interesting. I think we can get to the next.
Yeah. So I have some very good questions for you, Pratim.
Make it easy. I don't want any tricky questions. Okay, please.
Okay. So, will the free zone trading entities?
Mm.
Now, this is important. With any free zone trading entities selling goods to another free zone, or mainland or overseas, get the benefit of 0% CT.
I said easy, Kanika. You've hit me with a very, 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 very difficult
That
question
was
at
my
the.
motive for the day.
So, so by trading, I mean you mean
Okay.
distribution, right?
Yes.
I think, and there are few legs to this question. So I'm assuming that
Hmm.
this trading entity will be based in a designated zone, because if you're not in a designated zone, then if you remember, that benefit of qualifying activity can only be got by an entity in a DZ, a designated zone. So if you're in designated zone, there can be few scenarios. Like I mentioned, I bring in goods into the designated zone and give it to a mainland entity. Very critically, that mainland entity needs to resell these goods or materials, or needs to process, or kind of alter it for resale as well. In that scenario, it seems that because the goods have been imported through a DZ, you satisfy those conditions. But in the other scenario that you mentioned, that a DZ to say a foreign entity. Now, DZ to a foreign entity can get tricky. There are two scenarios there as well. So one scenario is that goods enter the DZ, stay in the warehouse, and then go out of UAE to the wherever your purchaser are. And the third could be typical high sea sales where the goods never enter
Hmm.
UAE, right? You're purchasing on paper, selling it,
Hmm.
and the goods are moving from foreign country to foreign country. It seems a bit tricky, the two scenarios I talked about, because you can you really say that the goods have been imported into UAE through the DZ in these two scenarios? It seems not.
Yeah.
This all requires a very, very careful analysis, very honestly.
Are we still, I mean, it's still a gray area for us. We still want answers. We still want evaluation for this.
Lots of there can be hyper technical evaluations or interpretations with every word that are being used, but plain reading suggests that these scenarios may not be covered. But yeah, let's
Okay,
say.
so I have a cross question for you, similar to what we've discussed. So if the goods are moving from a DZ to a mainland, okay, and the customer is importer on record,
Hmm.
and the customer wants to get an installation done in his mainland factory, so do you think that particular installation charges would be subject to a 0% CT?
Um, Very interestingly, this comes to ancillary, right?
Yeah.
Ancillary services are a big litigation points in other countries. So you'll have to look at whether this service would be an independent service in itself, and would it even exist without the main.
So this would vary from case to case
It
basis.
would vary. So in your
Hmm.
example, would the customer really ask for installation services without actually purchasing that machinery? No, right?
Hmm.
It's a part of the entire sale process.
Hmm.
You can make a case that it's ancillary, but yeah, like you mentioned, it has to be seen case to case.
Yeah. Okay.
Yeah.
If a free zone entity is earning rental income from a mainland entity for warehouse located in free zone,
Hmm.
what would be this taxability?
Warehouse located in a free zone. So it's a commercial property in a
Yeah.
free zone. So you'll have to see whether the income is from a free zone
Yeah,
person
so it's from a mainland entity.
from mainland. So
Yes.
if it's a mainland entity, then it will be taxed at 9%.
9%.
Yeah.
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 What if a free zone person is earning rental income from a commercial or a residential property, but the property in itself is located in mainland?
Okay.
Hmm.
So mainland property can get tricky because it might get into the excluded activity or exclusion scenario. So there you might have to satisfy the de minimis because it says ownership and exploitation of immovable properties other than those located in a free zone. So or with a free zone person, then you might have to satisfy the de minimis criteria.
So, the de minimis criteria, are we also looking at the domestic PE in this? No.
We'll have to look at it. It can get tricky because if it's a domestic, you can make an argument that the property is a domestic PE, but because it's specifically also covered in
Hmm.
exclude activity,
It
there
would
it
be okay.
overlaps.
Yeah.
Yeah, it might
Okay.
de minimis might
Okay.
apply.
So
Yeah.
we've talked about substance. We know ESR works on substance. The SIGA activities you're performing. You have to, in order to have substance, you need to have SIGA. You need to have adequate number of employees. You need to have adequate number of expenditure. So all these are the conditions, right? So when we talk about substance requirements in a free zone,
Hmm.
how do you determine adequacy?
So, very, very good question. Now, adequacy has not been defined. It's not been defined even in ESR law, but people are familiar with it. It depends
Mm.
on what the extent of your activities is. You really have to see that. And so, if you're manufacturing plant, if you have a manufacturing plant, you obviously need more assets,
Hmm.
more people. But if you're just a headquarter company, right, you just need few senior management folks. So you have to just see what
On a
at
case to case
case to case
basis,
basis
what would
and
adequacy be for you, right?
exactly and also where do you maintain this adequacy. So very clearly the decisions have said that you need to maintain this adequacy in a free zone. Now enough they've used in a free zone, not in the free zone, but that you could stretch that to think that you could if you're in one free zone you can have certain people in another free zone. But I would say err on the side of caution. It would depend from case to you really have to see what activities you're carrying out, and it's rather you carried out in the free zone itself.
Will this A or when you're talking about this A or the, right?
Yeah.
Will that matter because there is no discrimination between any free zone? Like in VAT, it's designated zone and free zone. Will
Yeah.
this A and the matter?
But see, these are very hyper technical interpretations,
Mhm.
Kanika. I think we'll have to see practically case to case. So if you have a manufacturing plant, right?
Mm.
Just can you really have people working in another free zone when the manufacturing plant is located in the other free zone? It seems very odd, right? But if you have, say, a reinsurance business, you might have a branch in another free zone,
Mm.
right? So there you, like I've just seen, I've given you one
Depends upon what arrangement you have,
exactly,
right?
exactly.
Okay. So, what will be the taxability of gains from transfer of assets earned by qualifying free zone person?
Very honestly, the decision is silent on gains on transfer of assets. You have to see whether this gain could be considered as income from immovable property or not. You have to make that case first.
Yeah.
And then you have to see whether this asset or this property is located in a free zone and
Mm.
whether you're selling it, whether it's commercial. Yes. And if you're selling it a free zone person,
Then de
then only
minimis.
0%. If it's not free zone, maybe de minimis, maybe
Mm.
9%. Again, you have to see case to case basis. But first and foremost, you have to see whether this gain itself from the sale of this immovable property, can you say it's income derived from an immovable property?
Mm.
That case has to be made. Yeah.
Okay. So, whether election to opt out of qualifying free zone benefits is irrevocable.
This is, I think, the decision has not clarified this. I think this aspect people were looking at the decision
Hmm.
because if you recall, the public consultation
Yeah.
document had hinted at it,
Yeah.
right? That it's irrevocable.
Yes.
But if I read the, if I read the, decision in itself and the law, the law says that if you once you elect to be a non-qualifying free zone person, then it starts from a tax period, but it doesn't talk about, you know, clawing that option,
Revocation. Yeah.
revoking that option
Yeah.
back. So it hints at an irrevocable option, but it's not very clear. But the way the law reads, it reads that it starts from one tax period, but you don't have an option of
We
refusing.
don't know because the PCD had spoken about it. So people don't have clarity whether whether should they consider PCD now, even when the law is out, decision is out, or we are still waiting for further clarification from FTA.
I would advise people to consider the law in itself, law and decisions. PCD was just a public consultation document. It's not a law in itself. If anyone needs to now refer to any kind of provisions, it's the law and the supporting decisions.
Yeah, so this is the last question for the day for you.
Uh, okay.
So whether 0% will be irrelevant when Pillar 2 is becomes applicable, when Pillar 2 rules become applicable, when adopted. This
So
is
the last question in itself is quite a tricky one. So people are worried that I think and multinationals are worried that if they're free zone entities in UAE and they get the benefit of 0%, that what's the point? Pillar 2 comes in, that 0% will be topped up as to 15%. But I would advise, at least corporations, it's not as simple as that. You have to wait for what kind of rules UAE implements,
hmm,
whether within those rules they have certain exemptions for qualifying free zone persons or not.
yeah.
You'll have to see that. And there are currently, even without those exemptions, in the pillar 2 that different countries are adopting, there are certain exemptions for substance based exemptions. So if you have substance, if you have enough employee assets and things like that, so that 15% can be brought down to a lower percent as well in the current. So the pillar 2 in itself is a law.
Hmm.
There's a
It's a
different
separate law, right?
the different calculation, different base,
Hmm.
different exemptions. So it's not as straight and simple. Okay, 0% will become 15%,
Hmm.
and we'll have to wait and watch how UAE implements
It,
pillar 2.
yeah.
Yeah.
Done. Thank you so much, Pratim.
Thank
Thank you, everybody. Please do reach out to us for any clarifications. We are available at info@a.anderson.com.
thank you
I
everyone.
hope you all enjoyed.
Yeah. Thank
Thank
you.
you.